Hey Sampham, this is Shreya from SAMAYA, and today we are going to discuss RTP. And this RTP had consists some academic updates with regards to two sections, which is nothing new, more to talk about. So we'll just go with the gist of it and a corner note system where you could get the cue here and you get the notes here. And after you take a printout of this, you could cover this portion and you could recall what all the information that was asked for. It talked about section 53 where shares were issued at discount and section 147 for non-compliance of company audit provisions. So we'll discuss section 53 first. A company shall not issue, we know that the company shall not issue shares at a discount, but there were two exceptions there. When shares were issued on as sweat equity shares, and the second thing is shares were issued to its creditors when the debt is converted into shares. That is like internal reconstruction or under any other scheme or amalgamation. So we'll see now. A company shall not issue shares at a discount except for sweat equity shares. Second thing, if at all they have issued, it shall become void. Company may issue shares at a discount to its creditors when its debt is converted into shares. Any company fails. Since there were some regulations here, there exists some penalty if they do not comply with that regulations or provisions. Any company fails to comply shall be liable to a penalty of the amount that was raised of 5 lakh rupees, whichever is less. If they have the face value, if the total face value of the shares, say 10 lakhs, and they were issued at a discount, and the company had raised 4 lakhs. Such raised amount, not the face value, raised amount, that 4 lakhs or 4 lakh, that was in our example, or 5 lakhs, whichever is less. That is, the penalty would be 4 lakhs in our example. So the auditor need to check what the auditor need to check with regards to any kind of regulations. What you could simply what you have to check is that what's the objective of that regulation. The object is with regards to the share capital. So what the auditor need to check, the movement of share capital. Share capital can be where the root of that share capital or such transaction happens also should be checked. Where that happens, it happens in board meetings or committee meetings. What you have to check, you have to read the meetings of such meeting, read the minutes of such meeting, verify that the company has not issued any of its shares at a discount by reading the minutes of the meeting. Okay, there was a restriction in this provision and there was also a relaxation with regards to the creditors. So auditor also has to check that relaxation, also verify that when a company issued shares at a discount to its creditors, when its debt is converted into shares under any statutory resolution plan or debt restructuring is as per RBI regulations, you have to check whether such conversion of into shares was debt into shares was as per RBI regulations. Now we'll see our second topic. Section 147, punishment or non-compliance of company audit provisions. They are saying that if they do not comply with section 139 to 146, that is Companies Act chapter, the fine. Here they're talking about the penalty. Penalty is something you pay to the government. Fine is something you pay to the court. Fine, minimum 25,000 to max 5 lakhs. If it's a for a company, that is for the company. For the officer in default, minimum 10,000, maximum 1 lakh for every officer in default. And for the auditor, there's the company and the directors. And now for the auditor, if he had contravened section 139, it talks about the resignation of the auditor. He has to submit few documents, right, if he had not complied with such provisions. And section 144 with regards to limitation of scope, if the management had unreasonably limited the scope of the auditor, he has to leave that engagement. But the auditor had continued that, violation of that. And 145, it's about the giving a wrong opinion in correct circumstances. It's not giving an appropriate opinion. Yeah, fine. Minimum 25,000 for the auditor, maximum 5 lakhs or 4 times the remuneration, whichever is lower. This whichever is lower is applicable to the max limit. If his remuneration is say 1 lakh, then 4 lakhs or 5 lakhs, whichever is lower. So the maximum limit would be 4 lakhs in our example. Minimum 25, maximum that 4 lakhs in our example. So this whichever is lower goes with the only the maximum amount, maximum limit. If the auditor had willfully contravened section 139, 144 and 145, he had contravened the provisions knowingly or willfully with an intention to deceive whom? Company, shareholders, creditors and tax authorities. The fine would be minimum 50K, maximum 25 lakhs or 8 times the remuneration, whichever is lower. And an imprisonment up to 1 year. imprisonment up to 1 year plus fine. And he shall also be liable to refund the remuneration received and have to pay damages to the company statutory bodies and members. And CG may appoint an officer to for prompt payment of such damages, and the auditor partner who is have contravened the sections per acted. For the civil liability, they were jointly and severally liable, and for the criminal liability, they were the party concerned, the partner concerned, or the partners concerned. These are with regards to if he had willfully contravened the provisions. Fine, imprisonment, he has to return the remuneration and pay damages. CG may appoint an officer, and the partners were jointly and severally liable, and criminal liability, only the concerned partners were liable. And that's for that academic update. And now we'll see the questions portion. This is a case scenario one, and Kaur and Associates, a sole proprietor firm of Simran Kaur, is offered appointment as auditor of a company engaged in manufacturing of automobile components for the first time. That is, it's her first engagement. She is fact checking about the integrity of the promoters, SQC1 and SA200 series of the company and key managerial personnel, and the matters such as competence of staff. Very good. And she's following SQC1. The appointment is subsequently accepted by her. She's also taking into account number, the location or branches of the company, requirements of Schedule 3, and expected time by which the audit has to be completed in keeping view with statutory requirements. She's also seeing the time that has to be complied with as per statutory requirements. Initially, I think she had read the SQC1 and following all that. Initially, she thought that it proper to inquire employees of the company in procurement and marketing departments and plan for the same. She has also planned to visit 3 plants of the company, and the purpose of planned visit to identify and assess the risk of material misstatement. A detailed set of instructions have been prepared by her office, and it has been handed over to the engagement team. And these set of instructions were deals with sales, income, and expenditure and purchases. During the course of execution of the audit, it was brought to her notice that the company is also producing substantial quantities of scrap during its manufacturing process. However, no instructions have been given to her engagement team. This is what the case scenario is. It's very hard to remember if you wanted to revise the RTP in the day before the examination. It would be very hard to read all this, right? So what we have done is we have made a gist of it so that you could read it in very quick reference. For the quick reference, Simran Kaur, she's an sole proprietor, appointed as auditor, checked the integrity of the management competence and took the number of location of branches and planned to visit 3 plants of the company, and it's for the purpose to identify the risk of material misstatement. Audit procedures instruction were given to the engagement team, but notice that the but they did not include scrap. And notice that the company produces substantial quantities of scrap. And what they were asking, first question, they're asking about auditors fact checking about the promoters and key managerial person. She is also considering competence of staff to perform engagement. What is she trying to do? What is she trying to do? Comment down the answer below. And she's whether she's establishing audit strategy, and she's conducting preliminary engagement activities, she's designing audit plan, she's checking her compliance of ethical requirements. Pause the video and go and comment down the answer. Option B, she's conducting preliminary engagement activities. After checking her integrity of integrity of the promoters and competence of the staff, then she accepted her. These were also the as per SQC1 and SA200, they have to check before accepting any kind of engagement. That's what we have also mentioned here. Checking about integrity of management competence of step. What she's trying, she's doing preliminary engagement activities. And second, consideration of number and location of branches, requirements of financial reporting framework, and expected time of completion of relevant factors, primarily for which following. Why she's doing all that? To develop an audit plan, establish overall audit strategy, designing audit program, and designing risk assessment procedures. What is she doing? She's establishing an overall audit strategy. Before execution of the work, she's doing what? Audit strategy. So option B, establishing the overall audit strategy. Taking into account description of planned inquiry and visit, which of the following statement is true? Planned inquiry and visit fall in the area of Audit strategy, no, they have already done that. Audit strategy is just you sit here and it's not a audit plan. It doesn't come under audit plan. Planned inquiry and visit are planned risk assessment procedures and fall in the field of audit plan. Yes, this is most appropriate. The set description is not related. No, not related to audit planning is not the case. Planned inquiry scope under audit program. No, the restrictions were those comes under the audit program. So option B is more appropriate. What is detailed set of instructions given to assistant work audit program? See, took number of locations, audit program, and the issue for generation of staff has been overlooked. What she has to do, she has to ignore those information. She should modify earlier set instructions. Yes, she should modify that. She should leave the matter to the engagement team. No, she should put a ball in court of management. As no, management cannot do. She cannot transfer the responsibilities for that. She should modify the earlier set instructions. All these five were given to you for your quick reference here. Now we'll see case scenario 2. Okay, we'll do one thing. We'll see case scenario 2 from here. Issues regarding audit documentation, what they have for. We'll see audit program assigning responsibilities to 4 members. Okay, 2 CA final students, 1 CA, 1 partner. Determine materiality for the financial statements as a whole. Okay. Assess the risk of material misstatements to be low. Okay. CA is responsible for attending inventory count process and its documentation. Okay. Many related party transactions have come to notice. Okay. If first MCQ under this case scenario is verification of revenue was assigned to a CA final student and verification of trade receivables was assigned to a CA but done by a CA final student, or trade receivables was assigned to CA but done by CA final student. Sure, they document such change. Yes, they should document that change. We'll see what's the answer. It is necessary that audit program is suitably updated or notes that are given in working papers to its effect so that planned duties are in accordance with actual work performance. So they have planned something, they've had occurred some change. So what do they have to do? They have to update their audit program so that the personal responsibilities is very accountable and known to the point. As regards to materiality, which of the following is which is most appropriate in context of audit documentation? Okay, what they are saying is that with regards to material, which is most appropriate. Materiality has already been determined. There is no need to put into working papers. No, materiality depends upon professional judgment. Yes, whatever amount has been determined can be documented in working papers. Yeah, put it aside. Materiality arrives on base of professional judgment along with the factors considered for has to be documented. Yes, the factors also should be documented. The reasons. C is most appropriate, I guess. Materiality has been arrived upon professional judgment. It also depends upon professional judgment whether he wants to document or not. No, it's not discretionary, it's mandatory. Option C is more appropriate. And we'll see third one, assessment that risk of material misstatement is low. Which statement is all relating to documentation of risk? Okay. We'll see which statement is odd, which statement is incorrect. Discussion amongst engagement team members and details of significant decisions reached has to be documented. Yes. Details of risk assessment procedures has to be documented. Yes. Details about understanding of each component of internal control was obtained has to be documented. Yes. Precise calculation of risk of material misstatements has to be documented. Precise calculation. How do you measure risk? This need not. I think this was something that's odd. Yeah. Option D is most appropriate. They have to document the significant decisions, risk assessment procedures, and understanding as per SA 315. But not there was no kind of regulations here with this. So option D is most appropriate answer, which is odd one out. Fourth, attending fiscal inventory count. Not true in this regard relating to audit document. Which of the following is not true? C is responsible, which is not true. Dates on which fiscal inventory count process was attended by him should be documented. It may also include photographs of the date showing his attendance of inventory at a particular location. Oh, they were so updated. Detail of test counting undertaken should form part of audit documentation. Detail of obsolete goods found shall form part of audit documentation. Report showing that stocks conform to the quality control standards in accordance with law are essential part of audit documentation, which is not true. They have to give dates and they have to document the dates and they have to document the test counting details and absolute goods also. But reports for the quality control standards were as per law. They were not that's not part of auditor. That's not the auditor scope. It's mostly like managing of accounts and managing management duty responsibility, right? So option D is most appropriate answer. And with regards to related party transaction, which of the following should be a part of audit documentation? Should not be a part of audit documentation. Management representation letter, yes. Related party transaction policy, yes. Documentation should documentation to show that such transactions are at arm's length price, yes. It should be at arm's length price. All the related party transaction document to show that the transaction at close length price, no. This is most appropriate answer. With these, this is something that's odd or not. And we are going to see the general MCQs here. The term drawing power is associated with which of the following facilities are sanctioned by any bank? Drawing power is mostly for overdrafts and cash credits, right? Option D, cash credit limit, which aims at whether audit against provision of funds, proprietary audit, audit of sanctions, audit against rules and orders, which aims at ascertaining that expenditure incurred has been on a purpose for which grant and appropriation has been provided and the amount of such expenditure does not exceed the appropriation made. It's talking mostly about the expenditure audit, right? So we'll see which is most. Audit of sanctions, audit against rules and I think the most appropriate answer is audit against provision of funds. Why? Because they're also asking about the expenditure, right? Not about the sanctions, not only about the inflow, they're talking about the outflow more. So I'm not choosing audit of sanctions. That's most appropriate is audit against provision of funds here. That's not proprietary audit and that's not audit against rules and orders. That's mostly audit against provision of funds. Option A is more appropriate. Which of the following is not correct? A is 18 related party transaction, yes. A is 10 PPE, yes. A is 28 impairment of assets, yes. A is 16 is borrowing cost. A is 26 is intangible assets. So option D is not correct. Tools and techniques that auditors use in applying the principles of data analytics are also known as CATs, computer assisted audit techniques. Computer assisted. That we are taking computer as our assistant and doing audit. Computer assisted audit techniques. And fifth one is which refers to events or conditions that indicate incentive or pressure to commit fraud or provide an opportunity to commit fraud. What it's doing, like they are asking for the source which is influencing to do fraud. Fraud is not influencing to do fraud. Incentives, pressures, they were like more specific. This is more specific, but it's a more of a macro level is fraud risk factors. Misappropriation of assets is mostly a output of outcome of fraud. So we'll go with most appropriate fraud risk factors to cover a wide range of fraud risk factors. And now we'll go with this. Now we'll move on to the descriptive portion. According to SA 315, they are saying that state with reason whether the following statements are true or false. Okay. According to SA 315, the objective of the auditor is to identify and assess the risk of material misstatement, whether due to fraud or error, only at assertion level. No, we know that objective of SA 315 is like objective of auditor is to identify and assess the risk of material misstatement, whether due to fraud or error at financial statement and assertion level through understanding the entity, including its internal controls. So not only at assertion level, it's false. It's both financial and at assertion level. Now we'll move to the second. The control environment can prevent, detect, and correct material misstatement. They are saying that internal controls can prevent, detect, and correct material misstatement. It is never like that. What's that is the auditor has to check whether the internal control system or the control environment in the company could prevent, detect, or correct a material misstatement. This is only true when it has a super duper internal control environment, but not for every entity. So this is not something that fully acceptable. So put it as a false, incorrect. While While auditing the books of account of XYZ Limited, the auditor of the company looked at the inventory counting process to obtain audit evidence. In the present case, the audit procedures used by auditor is known as inspection. inspection is like for books of accounts, not for the inventory counting process. For the process, it's most like an observation, not inspection. Okay, we'll move on. So this third one is also incorrect. And when inventory under the custody and control of a third party is material to the financial statements, the auditor can obtain sufficient and appropriate audit evidence regarding existence and condition of the inventory by taking written representation from management. No, no, no. Whenever there are written representation, a mere written representation does not suffice or does not replace, or it is not an alternate for an audit procedure. So this is an incorrect. What it has to do, what the auditor has to do is that ask written representation of the third party like confirmation and something, and provide and do some alternate audit procedures, or go to that third party place and do inspection and then take a written representation. So this fourth one is also incorrect. We'll move to the fifth one. Assertions refer to the representations by the auditor to consider different types of potential misstatements that may occur. Assertions were like the statements that were given by management but not the representations by the auditor. They are given by management but not the auditor, so that's also wrong. Incorrect. As per SA 200, the overall objectives of the audit in conducting audit of financial statement, the overall objectives the auditor is to obtain absolute assurance. No, it is a reasonable assurance. So this is also incorrect. It's not an absolute assurance, reasonable assurance. And once the overall audit has been established, an audit plan can be developed to address various matters identified in the overall audit strategy. As first audit strategy then goes with the audit plan. The establishment of overall audit strategy and the detailed audit plan are closely interrelated. Yes, this is the first thing right in this all whole statements. Okay, the option seventh one, the seventh MCQ is right. Option 8, teaming and ladding is one of the techniques of inflating cash payments. No, it's like depreciating cash receipts. It's like suppressing the cash receipts, but not inflating the cash payments. It's something suppressing the sales or suppressing any cash receipts. So this eighth one is also wrong. Now we'll go with the second question. Professional integrity and independence are considered essential characteristics of all professions. Okay, there are two interlinked perspectives of independence of auditors. Yeah, professional integrity and independence are interrelated. Yes, and independence of mind and independence of appearance. Explain them. They're asking to explain the independence of mind and independence of in appearance. You see, in order to answer this, how you have to write, they're asking us to explain not a specific or direct question. So what we have to write about the integrity and independence and the importance of being independent. You could get that from SQC1. And you have to write definitions of these two: independence of mind and independence in appearance. What is independence in mind? You see, mind is something that was internal, inside, that's our mind. Independence in our appearance, that is external, what others feel, what others see. So the independence in mind is something that the auditor knows that he is independent. Independence in appearance is that the other person is judging that the auditor is independent. That's a core difference between what is independence, difference between the independence of mind and independence in appearance. And we'll see answer for that. And okay, they're saying that professional integrity, independence, and they have given few definitions, and they say agreed for that. They were both were interlinked. We'll see with independence of mind. The state of mind that permits the provision of an opinion without being affected by influences, allowing an individual to act with integrity, objectivity, and professional skepticism. Independence in appearance is like avoidance of facts and circumstances that are so significant third party would reasonably conclude auditors' integrity, objectivity, and professional skepticism have been compromised. They're talking about from the view of third party. This is with related to that auditor himself. And now we'll see second question 2B. The chartered accountant has responsibility to remain independent by taking into account the context in which they practice. Yes, the threats to independence and the safeguards available to eliminate these threats. Explain the guiding principles in the above context. They're talking about the threats. What they're asking is a direct question on guiding principles in the above context. We'll see answer for that. as they have just directly gone because it's a direct question. They haven't given any kind of introduction or explanation. What are the guiding principles in this round? For the public to have confidence on the quality, it's essential that they should have always appear to be independent. I think we'll see whether we have given here any kind of short notes here. Yeah. Now we'll read for the quick reference part the guiding principles of threats to independence. The auditor should always be appears to be independent of the entities that they are auditing. Yes, they are saying that they have to be independent and integrity, objectivity, professional skepticism should be there. And before taking any work, they should consider the threats to independence and if there exist any threats, what do they should do? They should either desist from the task or put in place safeguards. That's they're talking about the threats only. This is the something that's related to threats of independence. If unable to fulfill that to implement the safeguards, they should not accept the work. These were the general guiding principles. They're talking mostly about the SQC1 elements. Okay, now we'll see the third question. The actions of an engagement partner and appropriate message to their members of engagement team in taking responsibility of overall audit quality. Emphasize the importance of audit quality. Explain as per SA 200. You could write everything that you get into your mind with regards to SA 200. We'll see what's the answer. You see, they have given about the introduction, some introduction about SA 200, and they're giving importance of the audit quality, importance of audit quality. We'll see with it or quick reference. As per 200, what they have to do is that they have to perform work with regards to professional standards, regulatory and legal requirements, and comply with firm's audit quality control policies and procedures, and issue audit reports that were appropriate, and engagements team ability to raise concerns without fear of reprisals. They are at first talking at a larger level about something professional standards, regulatory and legal. Now they have come to their firm level and they're talking about the compliance of quality control procedures, and they have got into deeper and they were talking about the engagement's ability to raise concern, and finally about the output, the auditor report. They're talking about that. The responsibility of the auditor is to issue audit report so that the audit report should also be appropriate. This is what they're talking about. And now we'll see the next question. Question number 3B. An audit is distinct from investigation. Yes. However, it's quite possible that sometimes investigation results from prima facie findings of the auditor. Yes, if if the risk of material misstatement or if the auditor finds any kind of frauds or non-serious irregularities in compliance, they can result in an investigation. Investigation is mostly like, there was a serious irregularity or that there's a fraud that had happened, and then investigate on who is the people or who are the officers who were responsible in audit and what's the penalty that has to be given. We'll see with a quick reference. Audit versus investigation. Investigation is a critical examination of accounts with a special purpose like fraud. The objective of the audit is to obtain reasonable assurance whether the financial statements are as a whole are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion. The audit is never started with a preconceived notion about state of affairs, about wrongdoing, about some wrong having to be committed. That is, they do not have any prejudicial thoughts. They think they are they have professional skepticism, but they do not have a preconceived notion that something is going wrong. If the auditor have given some findings of serious concern, that may prompt for an investigation. And now we'll see our next question. 4A. SA 300 states that the auditor should plan his work to enable him to conduct an effective audit in an efficient and timely manner. What matters should be covered in such plan of the auditor? What all the contents of the audit plan were? Audit plan should consist of what? Nature, timing, and extent of audit procedures that were performed, and clients' accounting systems, and the degree of reliance on the internal control. How we know that how much reliance have to be taken on for the internal control is the preliminary activities. They have to first understand the internal controls and the level of that and coordinate the work to be performed. And these were the contents of the audit plan they were talking about. And 4B, adequate planning benefits. Okay, now they are asking about the what are the benefits for doing audit plan. We'll see that devote benefits for audit plan devotes appropriate attention to important areas. Okay, with regards to time, and identify and resolve potential problems on timely basis. Properly organize and manage the audit team, assisting in selection of engagement team members with appropriate level of capabilities and competence. Direction and supervision of engagement team members and review of their work. Coordination of work performed by the auditors. You see, these were the characteristics or content of the audit plan. What the benefits were also so much so related to that only. They're talking about the coordination of the work. We have coordination of the work. They're talking about nature, timing, and extent of the audit procedures. Here, what they are saying, they have saying that attention, what to till what extent the attention has to be given, and with regards to the nature of that, whether they were seriously have to be put or identified to resolve serious problems or potential problems. They're talking about that, and they were talking about the client's internal control procedures or accounting systems and reliance about internal control. They're mostly talking about the properly organizing and managing the audit committee. And if internal controls were for that company, our firm's internal controls were our employees, our engagement team. So we have to move down to a bit lower, bit deeper, and then talk about the engagement team, about selection and their capabilities, competence. This is our internal controls. And the next question is, in establishing the overall audit strategy, the author shall identify the characteristics of the engagement that defined in its scope. Explain with an example. You see, we'll go blank when we get asked any kind of question to like explain with an example. Half of the work was done when we choose a simple example like purchase, sale, or like inventory counting. That's it. Anything, any audit procedure, you have to form an example with regards around these three, and it's very simple to find. So, what you have to do, you have to establish in establishing the author shall identify the characteristics of engagement that define its scope. Okay, we'll see what. Now we'll see how they have given the suggested answer. Any kind of audit procedures, they talked about any kind of audit procedures, it all revolves around nature, timing, and extent. All the 200, 300 series. And if you get any question to ask about identify or develop an audit procedure, what you have to write is you have to write about the nature, timing, and extent. But with regards to in concurrence with any kind of example like purchase, sale, etc., we'll see the this is what the suggested answer they have given. In establishing the overall audit strategy, the auditor shall identify the characteristics of engagement that define its scope. For example, the expected audit coverage, that is extent, including the number and locations of components to be included, the nature of business segments to be audited, nature, and including needs to be specialized knowledge, whether they're talking about the auditor's expert, and the expected use of audit evidence obtained in previous audit. That is with regards to time. For example, audit evidence related to risk assessment procedures and tests of controls. They're talking about the nature, timing, and extent here. The expect have a quick reference here. What defines the scope? As we said, nature, timing, and extent. About the extent, what number of locations or component have to be included, and with regards to the nature, what kind of knowledge has to be there, and with regards to time, expected use of audit evidence that was obtained in the previous year, previous audits. Here, nature, timing, extent is something that's bluntly we are telling. It's not a specific answer. So we could frame our answer with regard around that. And we'll move to the sixth question. You see, we cannot remember every kind of audit procedures or audit programs, right? This is as they have given in RTP. It's better to be on a safe side. It's better to learn that and go. You go and remember this only one small question. No, that's enough. And you could write it anywhere else if you get any kind of question there. 6A, Mrs. Summer and Dummer Associates are statutory auditors of Ganga Limited for the financial year 2020 and 21. CA Summer is the engagement partner of such assignment. While discussing with engagement team, CA Summer briefed his team that the auditor shall assemble audit documentation in audit file and complete the administrative process of assembling the final audit file on timely basis after the date of audit report. SQC1 requires firm to establish policies and procedures for the retention of engagement documentation. Explain. They're talking about the audit documentation with regards to SQC1. What SQC1 says? SQC1 says is that the audit documentation has to be done timely manner, have to be documented as and when, it had to be assembled as and when in a timely manner, and it has to be, the final assembly has to be done within 60 days. That is, till 60 days it could do the final assembly from the date of audit report, and it has to retain that for 7 years. And I will see the answer here. What they have, the auditor shall assemble the audit documentation in audit file on timely basis. As per SQC1, the time limit is not more than 60 days. That is 60 days included. There would always be a confusion, right? So if it touches 60 days, fine. If it's more than 60 days, if it touches 61st day, it's violence, it's non-compliance of SQC1. It should not be done. What are the changes that were allowed in final assembly were deleting or discarding or superseded documentation. Superseded documentation is that overriding documentation. First you have done one calculation, then you have acquired some other knowledge, and you find that this first one is superseded by some additional information. So that documentation you could discard that. So first one you could discard that. Sorting, collating, and cross-referencing working papers. That's like your sorting, and collating is like making into a bunch of files, like you're combining, and cross-referencing, signing off completion checklists relating to final assembly process, and documenting audit evidence that auditor has obtained, discussed and agreed with relevant members of audit engagement team before the date of auditor report. Before the audit report, okay, you could do these things, and that's it. They have given that, and we'll see the next question. That's with regards to audit documentation. 6B. As per SA 230, audit documentation deals with auditor's responsibility to prepare audit documentation for an audit of financial statements. Yes. Such audit documentation serve for various purposes. They're asking about the purpose of audit documentation, why you have to audit document or document your audit, or what's the benefit of audit documentation. It's a direct question, so we'll go with a quick reference. What's the purpose of audit documentation? First thing, it's for accountability and assist the management or assist the future engagement teams, and it would be an evidence how the work has been performed, or for any kind of you could for, if it's for peer review, you'll find an evidence for all the regulatories who is supervising you. This one all will go in detail now. Assisting the engagement team to plan and perform the audit engagement. The assisting members of the engagement team to direct and supervise the audit work. This is during the audit. During the period, it helps for the engagement team and helps to supervise the partner, supervise for the partner, and enabling the engagement team to be accountable for its work done, and retaining your record of matters continuing significance to future, that is for future reference, enabling the conduct of quality control reviews and inspections in accordance with SQC1. They're talking about peer review, and this is for the present. For the engagement team and the auditor, what do engagement do? Engagement team plan and perform. What the auditor do? He does supervision and direct the engagement team. And for the future reference, it's like engagement team being accountable, and it's for retaining a record. That's it. Present, future, and then for the regulatory peer review requirements. That's what the purpose of audit documentation is. 7A. Mrs. Suraj and Associates are the statutory auditors of Yuvraj Limited for the financial year 2020-21. During the course of the audit, C.A. Suraj, the engagement partner, requested the management of the company to provide written representations with respect to valuation of a transaction. The management, however, did not provide the same to C.A. Suraj. What course of action should C.A. Suraj follow with such a situation? Hello, mic testing 1 to 3. Now, what they are saying is that the management did not provide written representations. What the auditor has to do now? What the auditor has to do? We have to discuss with the management why. What's the reasons for not providing it? They were reasonable. He have to perform alternate audit procedures. If not reasonable, he have to check the integrity and all the previous written representations reliability. So, and if you find that there is a serious matter, you have to discuss with TCWG, and if also he's not satisfied, he have to withdraw the audit engagement. Now we'll go with a quick reference here. Management does not provide written representation. You have to discuss with the management, re-evaluate the integrity of management, and evaluate its reliability of written representation and take appropriate actions. Yeah. And now the second portion is what factors affect the auditor's judgment as to sufficiency of audit evidence. You see, what is the characteristic of audit evidence? What adjective we are trying to describe with audit evidence? Sufficient and appropriate audit evidence. Sufficiency with regards to the quantity. Appropriate is with regards to the relevance. That's the quality. What factors that affect were factors that determine the sufficiency of audit evidence: materiality, risk of material misstatement, and size of populations. If the size of the if the population is 100, you could get like 10 samples. If the size of the is like 10,000, you'll get 100. There weighs the sufficiency. There changes the quantity of the audit evidence that has to be obtained, and with more the audit risk, more the quantity is required, and more the materiality, lesser the quantity was. Well, this is how they were affected the quantity of the audit evidence. What is the objective of the auditor with respect to the opening balances when conducting an initial audit engagement as per relevant SC? With regards to opening balances, we know what we have to say. We have to say whether the opening balances amount was properly carried forward to the current year or not. And the accounting policies were also done the same way or not. We'll see with a quick reference if we have. Yeah, we have written that initial audit engagements opening balances obtain sufficient and appropriate audit evidence with regard about or opening balances contain misstatements that materially affect the current period's financial statements. That is, they're talking about the balances. That's a number, and the accounting policies whether they were applied consistently or not. That is, the balance should be correct, and the accounting policy also should be consistent. And that's it for this part, and we'll discuss the next questions in our tomorrow in our next video. And thank you. Please like this video and please do comment which all the topics we wanted to post next, and please subscribe